Every human requires this quality, accountability. That makes you want to have a lot of people come to you, work with you, deal with you, associate with you, and all whatnot. Talking about accounting, ladies and gentlemen, on our seats today, we have one very spectacular person that has a lot to say when it comes to accounting. I'm called VJ Fresh, and of course, I've got my co-host. Well, remember, it is Beyond the Bricks on Instant Showcase. I'm sure you feel excited, right? Let's get to my co-host. How are you doing, sir?
I'm very fine.
Mr. Ifan, you're always looking on the vibe side, right?
Yeah.
I'm happy to have you here with me today, guys. So Mr. Ibrahim is here.
Yes.
Mr. Ibrahim, how are you doing?
I'm doing fine.
Yeah, you look. Oh, one of the ways they see all this account. I'm not. Relax more. Yeah, let's get to the mode. That's more like it. That's more like it. Yeah. Good to have you here. It's been a while. It's been a while. So tell us a bit about the accounting process. You know, accounting is one very vital part of a company. True or false? Am I correct?
Very true.
And for you to be able to man such an office, that means you have capacity.
Very true.
Now, give us an insight on what are the basics required in accounting.
Let me take it this way.
Okay, please.
In Nigeria, we have a body that everyone knows when you talk about accounting. ICAN, right?
Okay.
Institute of Chartered Accountants of Nigeria. I think for every badge or logo or school, something, there's something that's written called motto.
Okay, a motto, yeah.
Motto, right? Mm-hmm. Have you checked the motto of ICAN?
Tell us.
Accuracy and integrity.
Accuracy and integrity.
So that defines what your mindset, your thought process, your lifestyle should portray as an accountant. You should strive to be as accurate and portray integrity. Why? Every business thrives on money. Money is like the blood inside. If you drain money, it's like you're draining blood. And you know that a human being, when you drain blood, what happens? It dies. So in business, if you drain money, what happens to the person? The business dies. So now, if you have the blood inside the human and the blood is leaking, for example, there are some persons that is it called hemorrhage?
Okay.
They have hemorrhage. Their blood cannot clot, so they're losing blood. What happens to the person? You are at risk.
The person just getting pale, and
you are at risk,
and death is close to you.
More so when the production of blood is not equivalent to or higher than the hemorrhage. So integrity means that you have to be sure that the records, the finances are well kept, are well documented. You see it where it is. You see it, what is being used for. These are the basics of the accounting.
Okay.
Yeah, and that is what is captured in what is called bookkeeping. Plenty of people confuse accounting to bookkeeping. Accounting is more than bookkeeping. And that is where people confuse of who to hire and why you are hiring and what you expect the person to do for you. Everybody now is talking about hiring a chartered accountant. What is the chartered accountant going to do for you? Where you need an accounting graduate, what they call accounts clerk, which is going to keep the elementary books proper for you. If you go and hire a chartered accountant and the guy comes, what is he going to do for you? Is it the chartered accountant going to keep the records for you? The books, the daily, no. So if you understand the basics of what you want and who you want to keep that thing for you to be good for you. But generally, as I've said, accountants are responsible for looking at the money is coming, the money is going out. And in recording, you are showing whether there is leakage somewhere or there is no leakage. By leakage, what am I saying? It might not all be theft.
Okay. So
Yes.
most leakages are not really theft.
Might not be theft,
Okay.
but wrong decisions. What do I mean? Somebody will go and buy a 500 kVA generator. The power rating of his factory is less than 100 kVA. What have you done to yourself? You've created a leakage.
What? You're correct.
So the
Yeah.
cost of maintenance, the cost
Yeah.
of diesel,
Diesel to run
will be
it
higher. And you'll be wasting money that is not required.
Client.
Okay, now you've mentioned bookkeeping and then a chartered accountant. And bookkeeping is mainly for young graduates. When a young graduate, is overseeing the account of a company, there might be some of these little errors that will be occurring from time to time, which might equally cause leakages. At what point do you think a company will need a chartered accountant?
Thank you. At every point, you need a chartered accountant.
Why do you say so?
Okay? He mentioned something
Okay.
that if you engage the graduate accountant, he might be making little mistakes. Yes. What is it? He might not understand some certain, let me use it as heads of accounts and how to classify some expenses. Because if you don't classify well, and when you're doing analysis, it's not sure where a problem is coming from. Now, the chartered accountant or the more experienced accountant will understand how to analyze the expenses and put them in their proper perspective to guide you in the decision making for the business.
So would I be correct if I say it will be proper for a chartered accountant to come set the structure
Very good.
for the other practicing or
So
just
as you are starting the business, that's why they are called consultants. You might not keep them, but have a consultant that comes every month to check what these guys have done for you. Even when you even have a more mature accountant, even if it's a chartered accountant, have another chartered accountant to come and check.
Checkmates.
Nice.
In the professional
Ladder.
there is what is known as self-review threats. Every accountant understand what I'm talking about. Everybody self-review threats. You could be making a mistake, an error. You know that there's an error, but you made the mistake. You cannot detect it yourself. You need another person. It's like what happens in the university where they have proofreaders. Is it? Proofreaders.
Yeah.
You've written the script. Another person will come now to come and to see where errors, dot the T's and cross the I's. It happens also. Who's going to do that? Call a consultant to come and review your books for you. You will see some small errors made, but not intentionally. Because errors can be unintentional and it can be intentional. So when you do this, you are setting the right course for your business
to thrive.
to thrive. You are doing like you are going for medical checkup on a regular basis to prevent the blood, which is the money, from wasting.
It was back to the illustration from the beginning.
Yes.
Okay, there's a growing concern in the society about accountants. You talked about integrity. That is on your accuracy and integrity. And now, there is no theft that happens in a company without the accountants. Most times.
That's not true.
Okay.
That's not true.
Okay, let me give you an example. Let me give you an example. I know a company that the accountants made away with about 1.7 billion. And he was arrested. And you know what goes on. And maybe because of his connections, and he was released. And the next thing he did was to come out with a brand new SUV. And we have had this record all over the places. I want to query the accountants of these days and the integrity we talked about. That is, are they still keeping up to these standards? If they are not keeping up to these standards, what do you think is the way out?
The example that you gave, somebody made away with
About 1.7
billion. Is he a signatory to the account?
You know, there are collaborations. We know how these things works. You understand the account very well. You can guide somebody to you.
I know what I'm talking about. Is he a signatory to the account?
I don't think so.
Now, if he's not a signatory to the account and he made away with that amount, was it the cash or was it in present
No, it
Nigeria
doesn't
now?
like that. It can be a cash.
In present Nigeria now, you have to do to the bank, right? If he's not a signatory to the account, who signed the check? That one is no longer, that one is exhibition of character of theft, stealing. It's not in the accounting profession. Because another thing that we also encourage in accounting is that have an accountant to set up your internal control mechanism. People do business without having internal control systems in place. And that's why I ask, is he a signatory to the account? Keep the accounts people, personnel, away from being signatory. Keep the books. Keep the records. Let it be that you went and stole the check, forged the signature. That one now you have deviated from the accounting norms of keeping your records. One you can say accountant is involved is when the records are manipulated.
Oh,
You understand now?
Yeah.
The records are manipulated. For example, in those days you hear that somebody wrote a check of 15,000. They are signed. Then you're going to add 20 at the back, making it 1.5 million. And because the check has already been signed, and then you alter the narration of the check to go and withdraw. That one, the person has beaten the internal control system, but that is left with the bank. Which banks now will? That's why banks now will alter. If you make an alteration, you're going to do a countersign that the person that signed this original signature knows that there has been an alteration. Those ones are not within the purview of the account. That is just demonstrating that the person has inherent integrity issue. That I can say accuracy and integrity is not the character of the person, but in keeping with the records and duty of work. So, to answer your question, I can't say that all accountants will be keeping integrity, but that is why the accounting profession says you should have internal control checks in place. If you have the internal control checks in place, you have prevented so much and concealing your business from being taken aback. It will help you in so many ways. And then you have this regular external person, consultant, coming to check your book. You will need everything that is happening in the board. That way, you are sure that the life wire of your business money is intact. If it is to the barest minimum, you are reducing risk.
Okay, talking about the life wire of the business being the money, we have seen so many businesses struggle. Some people call it lack of cash flow, and some call it lack of raising capital. I want to drive you to these aspects. In a business, which is more important? Is it raising capital or driving for or trying to make sure that you have a cash flow for that business?
Can you really separate one from the other? If you don't raise capital, you wouldn't have the money to execute, which is the cash flow. If you raise the capital and you don't know how to manage your cash flow, you will be requesting for more money, raising capital. And that is what I talk about. There are ratios, there are what is called ratios in accounting. Like what they call, for you to check this thing is what is called exit test. That's what is known as exit test. The ratio of your current liability against your current assets. That is what calls for your cash flow. Now, let me give you this example. Say you are selling, and you are selling on credit. Like selling on credit. Due period 45 days as a month, and you don't have enough, and you didn't calculate enough cash flow to meet that obligation. You know that you'll be having money, but you'll be owing your salary at the end of the month, because that check will be due in a month and 15 days.
So if at the end of the month, don't have available cash.
So in taking the decision of going to do that job, that the pay period is 45 days, you have to do calculation to check. It therefore means that you have to raise more capital to back up the cash flow so that you can meet. But and that is finance. Here, we know they do finance.
And finance is very important but in these days you see entrepreneurs paying less attention to finance. And maybe what they call finance is not actually, I wouldn't say accountants or consultants or editors, auditors are jobless. But I feel that they are not getting enough jobs. They are not being engaged as they should. What do you think is actually the problem?
Knowledge.
So the entrepreneurs lack that knowledge. They need to work hand in hand with accountants.
That is the problem.
So what's the way forward?
Very
Well,
good. very good question. I was waiting for this question because after all said and done, okay, we are here now. How do we live here? We need to leave this place we are in.
Yeah.
That is the way forward. So please, let's do the way forward. Because I'm sure everyone there watching wants to know how can we get better.
It's knowledge. Knowledge that you need the accountant. You need to tap from him or her. The accountant is not coming. In fact, these are the areas of accountant. But most entrepreneurs feel that the accountant is coming to cash money, to count money. No. So, underutilization of the accountant because of lack of knowledge. That is one. Two, when the accountant gives you the information, gives you the technicalities, gives you the detail, will you accept it? For example, now, like this issue of cash flow, there's a simple thing to do to erase your problem of cash flow, and that is what? Overdraft. Meet your bank to have an overdraft. What is overdraft? When I have zero balance, I should continue to spend on this account to this limit. I will pay you back before the month end. That's simple overdraft.
And there's no interest.
No, there is interest because it's a loan. It's a soft loan given to you by the bank. You don't get money now, and then you are drawing. You mean that the bank has given you loan.
You mentioned overdrafts, and a lot of business people don't know about that advantage. I really want you to shed more light on
the overdraft.
How overdraft can help a business.
I mean, someone can have that privilege to
Yes.
have an overdraft.
And when it's
When
qualified,
it's qualified.
When it's qualified, I wouldn't know because that is the is dependent on the conditions of the bank to give you an overdraft. So I wouldn't know. But when do you need an overdraft as a company? It's when you notice that you are having cash flow problems, just as you talked about. Now you are expecting your check to come, your invoice to be due. 30 days as a lab, you have to pay, and you don't have the money to pay, but you have a check that you are expecting. You can meet your bank. Okay, manager, give me this to make I pay my staff. I'm expecting this. If you have, the bank will be glad enough. More so when you are doing business with them, because you can't go today to a bank you don't know and ask them for giving overdraft. It must be the bank that you are using, and they've checked your record and that you are due.
Okay.
You have. Another thing that could solve it is what they call invoice discounting. Invoice
so
discounting.
what is invoice discounting? So that's the public rule.
Right.
Yeah, okay. This is a professional term.
Of course.
We need to break it down.
For the layman to understand.
Okay. Now, this invoice that you're expecting in 45 days to be due, you take it to an invoice discounter, person that can do invoice discounting for you, mostly banks. This is my invoice, it's going to be due. Take this invoice. When it's due, you get the money. I need physical cash now. If the invoice is say 10 million, the bank will say, okay, I'm going to give you now that 50, 9.5 million. Yeah,
9.9
million. The other one is the interest on the discount for the person to wait. We give you the cash and wait. When that check lands, you take
The
it.
bank will take it.
If you do that, you'll be afloat. So these are ways of solving that small insolvency problem, which is called cash flow insolvency. You don't have, you're expecting. Like one say you are hungry and the food never done. It's on fire. See that kind of hunger don't keep person because they see the food they done.
So there's hope.
Abi, so
Very
there's hope.
tangible one that.
Okay, without wasting much time, let's look at the current tax policy. You know, the current administration has changed a lot of things about taxation in Nigeria. And a lot of people are still confused what the tax law is saying. Apart from some are saying 25%, some are saying 15%, some are saying 30%. First, I want us to know the categories of tax for Nigerians to pay. As a business entity, what are you supposed to pay and when are you supposed to pay? As an individual, when are you paying tax and what are you supposed to pay? Then as a business name, which is a category of an entity, what is expected of them? And then what do you think they should start doing to avoid consequences?
Okay, thank you. Basically, tax are divided into two. Income tax and how will I call it? Should I call it social tax? Well, like income tax is personal income tax, company income tax. Those ones are derived from the income you earn, either as an individual or as a business. As an individual, you pay your personal income tax based on the salary that accrue to you or the income. That's what they are trying to do now. Whatever income that accrue to you, not necessarily salary, because now plenty people are doing multiple things. to accrue income. So it's not just one salary. So if you cannot explain that this money came from a donation or something, it came from a business, it will be taxed as an income to you as a person. Same also comes to the company income tax. Now, at the end salary, your personal income tax is paid monthly. But as a business, your company income tax is paid yearly, once a year, based on your activity for that period. Then the ones I would call like social taxes, withholding tax, VAT, and education tax, and so on and so forth. Those ones are paid by companies. There are statutes that enables you to pay. You know, whether you make profit or you don't make profit, you are entitled as a social responsibility to pay education tax. If you do business with somebody, you are entitled to be an agent of the government to deduct tax, withholding tax, and VAT. If you do business with person, the person is entitled. So there are two rules that each and every one of us, especially companies, play. One as a taxpayer, and two as an agent of government to collect tax. We have to get these things clear. Entrepreneurs have to understand there is no way you can run away from tax. In the social circle, what we learned in elementary economics, tax is a tool used by government for income redistribution, so to speak. They collect the tax, put it into government use to redistribute the money. And so, for example, now, when we pay tax, government has money, government give contract. You that pay the tax might not be benefiting from going to do that contract. Another set of skilled people. So it's supposed to be a way of income redistribution. So if you are not paying tax, it means that you are starving the government. Here in Nigeria, we are very fortunate that we have royalties that are paid into government coffers. Yeah, that makes the every now and then they go to Abuja to go and share allocation and all of that. Supposing that those allocations are not there, we will work for the tax. Every government will work for that. But you see what we've passed through over the period that makes people not want to pay tax are two things. One, multiplicity. If you drive a bus or you enter a bus, every junction that you go, they stone a ticket. That ticket is supposed to be coming from government, right? Mm-hmm. The United government has said all taxes should be collected by the internal revenue. So the internal revenue gives you a ticket once for the day. Mm-hmm. But at every junction, you are extorted for tax. Because that thing that you pay to those boys and it's tax. Who is collecting that money? What are they doing with it? Is the government not seeing it?
Now you have talked about governments. You said that taxation is mainly for redistribution. They collect from people that are doing business and then redistribute to other citizens, which might not have the opportunity to do business. Now, there are so many doubts in the quarters that if we end up paying this tax, what will be our benefit as citizens? Because of the management of the company, the country per se, the fear of the people is when they pay this tax, what is it going to be used for? Or are they still going to redistribute it to the pockets of politicians instead of providing basic amenities and then helping the poor through social welfare? But we end seeing that. What we see is how they share the money. But that's not my concern yet on this podcast. I think my concern is how to guide citizens not to fall victim with the new tax law. Because you now see somebody telling you that you're already at fault, and they are billing you like 35 million as a company. And they are telling you that yes, they will give you a demand, they will give you notice. And they will now tell you that this is not even tax, or this is because you defaulted, this is penalty. Now, after paying this, you now begin to talk about the actual tax. So I think that is the most painful part of it. How will you advise, or what should every business in this country do now to avoid such occurrences in their business?
Well, it's a naughty situation right now. We are used to not paying tax because of the way we run our system
For a long time.
for a very long time. So if you go to ask a person about tax, it's like you're looking strange. But it has always been there. That's always been there. So now there is more emphasis on enforcing, making sure that people pay tax.
Direct tax.
Yes. The reason is this, like I said earlier, we depend on royalties, government royalties, not taxing the individuals. Our people that go to abroad, UK and all of that, where they pay tax, we know how much government is generating. So I was listening to the taxman says that we can rake more money into government coffers if the individuals are paying tax, and that is what he's trying to do, to up the internally generated revenue to government through tax. Now, because we are used to a system where we rely on royalties and not, come on, just as you said, that the penalty is even more than the tax you're going to pay. So, number one, we should strive to run away from paying penalty. Now, and how do you run away from paying penalty? Submitting your tax documents on time to the tax authority. Do early self-assessment. Take it to the tax authority. Pay. If they come and say what you've paid is not sufficient, it is not that they will charge you for not filing your tax. You have exempted the penalty. What you've paid that is not enough is taken as payment on account, what they call payment on account, deposit. What they are going to pay is the difference between what you are paid and what is now assessed. And come on, there's this thing that people don't, anywhere I go to talk about tax, I tell you what I say. The taxman is given one duty, and you as an individual or a company is also given a duty. And what is it? The taxman is given the duty to collect as much tax as possible that they can collect from you.
Yes.
You as an individual is given the opportunity to pay as least tax as possible. You see the divide. So if you are not able to convince the taxman is ready to collect as much tax as possible from you. But if you can defend yourself, you pay the least. In fact, sometimes you will not even pay tax.
That reminds me, before you continue, when I was employing an accountant, the first question I threw to them after basic question is, how do you prevent me paying more money to government as tax?
Ask them that question.
And I asked a lot of accountants that question, and they were thrown off balance.
Really?
Yes, they were thrown off balance. But I think that is the key to this thing. Government wants more money. Then you as a company or individual, you need to work hard to make sure you pay less. So that is the knowledge we are getting from this podcast.
Yes.
So we are getting this knowledge from here.
Very, very vital.
So you have to educate us more. How can I prevent myself from paying more tax to government?
Okay. As an individual or as a...
Both as an individual and then as a company. You can shed light on the two.
As an individual, they call pay as you earn. So the more money you earn, you pay more tax. That one is, usually there are exemptions. There are exemptions to to the amount that will be taxable. But this new law has removed so many of those exemptions. For example, now, dependent relative, I think they removed that.
Dependent relative.
Yes, I think they removed that. There are some, I've not.
So what it means is that if you are dependent on me to survive and I'm giving you stipend, you're still going to pay tax.
Yeah, previously they will give you, I think, a maximum relief of 4% to be dependent on you. So they will remove that value of whatever that you're going to be giving those people from your taxable income. But I think I attended one seminar by the tax office. I think they will remove. I was asking them, says a whole lot of all of those allowances have been reduced and shrink. And then they've removed so many persons, even companies, what they call low income. For example, I think I did a tax computation. If you are earning 100,000 naira, you'll be exempted from tax.
But I think something like that is still exists because they said annually if you earn less than 800,000, you will not be paying tax. But rather you pay tax from anything above. So if you are earning 1 million, from what I understand, from what the taxman explained, I don't know if that's exactly what it is.
You're in the line.
So if you earn 1 million, they will remove 800,000 and begin to tax you from the 200,000 that is on top.
Yes.
As an individual. But if you earn less than 800,000, you're not going to pay tax. And that makes a lot of people started rejoicing. And I asked myself, are you not dreaming to earn more? You understand? So it's like, some people, when they see rich men suffer, they say, hey, we said it. They should suffer. As if they don't aspire to become rich. But that's by the way.
So that allowance is for personal income. They're trying to remove all this, what do they call it, basic income earners, like minimum wage and so on. Remove them entirely from paying tax. So if you have a payroll and you see people that are earning, if you do that computation, but even when you 200,000 that is remaining, if you apply the first percent, how much is remaining? Is government looking for 15 naira? So the tax policy now clearly says that they are looking for the top earners,
high income
earners to pay. So also for companies. This new tax regime now says if your turnover in the year as a company is not up to, I think, 100 million.
Yeah, 100
million. They're exempted from.
As a limited liability.
Yeah. They're exempted from
50 million for business name.
Yeah. So whatever that they are doing, but it boils down to what you said. Are you not aspiring to be doing? But as you are aspiring to be doing big things,
you need to pay tax.
How much is even the tax?
But I heard it's 25%, 30%.
Of what?
Of you explain to us.
The 25% or 30% is not of the turnover.
Yeah, of the profit.
Of the profit. And that is, I don't want to talk about this podcast. That is the secret of hiring an accountant. Or coming to do your books for you.
So it's now basic that every business needs an accountant.
Definitely.
Wow.
Definitely.
I think a lot has been said already.
Every
It came ready for us.
So now, we've talked about taxation, cash flow, raising capital, money being the lifeline of the business or the bloodstream of a business. Yeah. Now I want to come personally now. Yes, you've been an amazing person on this discussion, and wealth of knowledge in accounting, it has helped a lot of us and our audience. What was or what should be the motive of an individual to aspire to become an accountant? And what motivated you to be an accountant?
I was looking between engineering and medicine. So when it was delayed, it was not forthcoming, and I opted for. In those days, we look at profession. We look at the core professional. So it's either you are going to law, engineering, medicine, accounting, and banking and finance. Then those are
the days of young bankers, driving cars, those brand new cars, and all that.
So I now opted for accounting, and I went to study accounting. Now, why? Because one is a profession. One, by nature, I like analysis, being analytical. And just as we are talking, if you are not analytically minded, you can't survive in the accounting environment. Look at the intricacies of reading. You don't just see papers, or you don't just see figures. You read in between what the figures are saying. That becomes so. If you are not analytical in nature, you will not be an accountant. You just go to read.
So should I say it happened all by accident?
Well, maybe I would it happen by accident, but I'm loving the
Accident.
The accident.
Yes, of course. Because we found out that a lot of Nigerians study the course not just because they love or they have knowledge of what they wanted to study. So it was just because maybe during the application for admission, they were able to get this particular one, and then they furthered with it, and then some of them loved it. And we had a lot of people that studied, and then after they studied, they just left that profession because that was never their intention, and they just wanted to become graduates and called graduates. So it's nice having Mr. Iben. Mr. Iben from God. Yes. We are happy that we shedded more light on a lot of issues that our Nigerians are passing through stress to understand. Maybe next time we'll have you on podcast. We'll talk deeper on how to, raise cash flow, how to raise capital. We'll go deeper to this issue. But nice having you on this podcast.
So your name completely, what's the full name for those that don't really know?
My name is Madigi Iben. Madigi Iben, that's my name.
Yes. Because I wanted to do that, I don't pronounce it correctly. So I didn't want to go, so I'm not writing about my mind. So I have to respect myself. Okay. So it was nice having you, Mr. Iben. I'm sure there's a whole lot you want to tell us, but for now, let's go so we can have other things to come on the show.
No problem.
Thank you so much, ladies and gentlemen. It's of course a great time with Mr. Iben. He has said so much in regards to accounting and how well we should attend to accounting in our company and of course our personal lives. Tax was talked about as well in its extremities. For now, it's bye from me, Brother Crash. In the meeting, and of course, my co-host, Mr. Ifeanyi right
Yes. Bye. My name is Ifeanyi Iwayao.
Thank you so much. Thank you, Mr. Iben. We'll see you on our next. Bye for now.